Welcome to Markets Now. I'm Michelle Rook with Allison Thompson of the Money Farm. And we had a lower day, sharply lower day in the grains. Livestock futures were mixed with cattle higher hogs lower. And Allison, let's talk about the grain complex in sum total. It felt like kind of one of those end of month profit taking days.
Yes, it definitely was a positioning day actually here to start the week. It seems like that's all we've been kind of talking about are these May contracts going into delivery and how the trade is handling that. So obviously we're seeing some rolling out or some profit taking happening in those May contracts, and obviously it has an impact on the deferreds in the next front month. So we did see some of that action come into play today. We did see some bear spreading, particularly in corn and soybeans, actually both spreading in that Minneapolis wheat contract. So it'll be interesting to see what we get for deliveries here on these contracts. And it always kind of comes to a question too. We could see some repositioning on the board after we go through delivery too. Sometimes we go through a period of repricing. So once we get past that, the market might find support, or we're going to be blowing through it. And going into deliveries here, we definitely are at some key support levels for a lot of these commodities. Spring wheat's testing lows, so is soybeans, and even corn's flirting with some key levels of support here. So if those are broken through, I think we could see some further downside. But on the plus side, we're holding it so far. So there might be some room to the upside once we pass deliveries.
Yeah, July, the 200-day moving average. We just barely held that today in beans, didn't we?
Yes, we did, just barely. That 200-day comes in right near where we closed today on the July contract. 1050 being a very key level here for July. And even for beans, the 200-day 460 is going to be important to hold going forward. And even Minneapolis, we saw Chicago and KC wheat print new lows for the move today, and new lows lower. But we saw Minneapolis actually hold strong. Now, not very strong. They were only 4 cents off the contract lows, but still were able to hold it. So there is some light here that we're seeing a bit of support come in, maybe from the weather that we saw here up in the spring wheat areas for getting the rest of planting done. Or maybe we're finally starting to see some demand come in at some of these support levels, which would be good for grains.
Right. So one of the other factors was this fast planting pace, 24% nationally on corn, beans, 18%. That is way ahead of average, isn't it?
Yes, all of the grains, corn, soybeans, and even spring wheat came in above the 5-year average for planting pace this week. So I think that just kind of puts any notion of some delayed plantings happening at bay for now, especially when we're getting close to a quarter of the crop to a third of the crop on spring wheat being in the ground already. And it's early. It's only the beginning of May here this week. So we're not behind on any means. Getting that much in the ground, and now we're seeing a good window of weather in the forecast here to get the rest of the crop in the ground. The trade isn't seeing any room for concern. So pedal to the metal seems to be what we're going with this year, but of course we're all subject to change. I think once we meet that 50% planted mark, we're going to start looking at longer term forecasts and what the growing season is going to entail. But until we've reached that in the near term, it just isn't giving us much support here for the grains.
Let's talk about the winter wheat rating as well, because that was above expectations, wasn't it?
Yes, it actually came in higher than what we were at last week. We did see it increase, and we saw very poor conditions decrease. So the crop is looking to be in better shape. And again, a lot of that just had to do with the rain going through. So obviously, it goes back and forth with weather forecasts here for down there. But honestly, it looks like some areas might be drying out here again. So again, it just goes back to what forecasts do here going forward.
Unfortunately, KC and Chicago at new contract lows. Is there any hope for that market?
I would like to think so. Obviously, right now with the dollar being lower, it does help us out being competitively priced, but it seems to be most reactionary too of what the dollar does, and it's on its daily movement. So if we see some daily movements higher or lower, we're seeing wheat react to it. And with the crop being in good condition and the outlook that the market currently has, the path of least resistance is lower. The thing is that we're watching here now is a problem in production somewhere. The US isn't out of the woods yet for any type of a production scare, but also keeping an eye on Russia this time of year too, as their crop exits dormancy, will be pretty key to this market.
I got to also ask you, you see some concern right now about maybe some frost potential in Russia. Does the market care about that at all right now on the wheat side?
But they're looking at a frost potentially ahead of a good weather stretch. So if they do get it, obviously it could give us some support on our market. But again, it's winter wheat. It seems like it still comes back 9 lives. So we'll have to see what it actually does to their production numbers. We haven't seen Russia's production numbers move very much. And in fact, we've seen some analysts even increasing their export numbers for Russia. So it's really a mixed bag of what we're getting from there. So until we see some proof in the pudding, I think it's going to be hard for the market to go off of that headline alone as far as sparking a significant rally.
Yeah. So you mentioned the dollar index being a bit higher, weighing on the wheat. We had a lot of outside market factors today because crude oil was down hard, the dollar was up. We're still getting impacted by money flow on any given day, aren't we?
Yes, economic outlook is definitely at the forefront for outside markets, and obviously it correlates to where our grains are at and what we're perceiving that to do to the grains. Obviously, today's economic reports kind of shifted in what that outlook would do to demand. So we did see crude oil fall down, and we saw the dollar go higher, higher for longer. So not that we're breaking, above resistance levels or anything like that, and the U.S. dollar still remains below 100. And that's, in my opinion, still supportive for grains and keeping us viable on the export market. But we'll have to see how much continuation we get. We're still weeks away from a few big economic reports, the inflation reports and things like that. Those are going to be key for the trade. In between now and then, we're probably just due to those fluctuations on those weekly reports.
That, and we're still watching kind of trade developments, tariff news. It's been a little quieter, except for maybe a little talk today about China, things maybe not going as well. And the other story about China was that they're going to try to cut back on at least soybean meal in their feed rations, right?
Correct. They announced today that they are planning to lower their soy meal in their feed rations to 10%. Currently, they're at 13.5, and just a few years ago they were at 14.5. So this is something that they've been kind of working on and lowering on. So not a huge surprise to the trade in that respect, but it was a big drop. So we did see that come through in the soy complex today. We did see meal drop lower, and we saw oil in that spread trade actually trade higher. And unfortunately, soybeans kind of fell to the meal side of it. We did see them trade lower today with that. So, how this all develops, and of course, we're just subject to those headlines that happen on a daily basis as they kind of work through this trade dispute to figure out what that means for our crops and obviously our byproducts too, which have become pretty important on the global scale.
And cattle market, more new contract highs in both the live and feeder cattle futures. None of us really know where this thing is going to top, but what do you think are going to be some of the signals? Will the charts tell us this first before we see it fundamentally?
Well, it definitely could be. When you get to extremes like this, it's really hard to navigate because you're in, unforeseen territory. You're in no man's land. You don't know where the next point of resistance is going to be, and so on. So both make it important. Obviously, right now the market is really focused on cash, and cash is driving that market. But the technicals do remain important too, especially now we came off of a bit of a correction in the livestock, and now we're coming back up again. So watching some of those technical indicators can be a little bit telling on whether we can see some new highs or not. And actually, one of those that I have been watching is the RSIs. We've seen them come up, and now we're making new highs again. And the RSI, which is the relative strength index, isn't as high as it was on the last highs that were made. So we do have some room here still to go to the upside on this thing. I don't know how far that is. That's obviously anyone's guess, but if cash remains strong, I think there is some room here for the market to continue to go higher.
Okay, thanks so much as always. Ellison Thompson with the Money Farm. That is Markets Now.